And we begin with breaking news. The Federal Reserve moments away now from a major interest rate hike. The Board of Governors expected to raise rates 0.75%. It would be the highest rate hike in nearly 30 years. Now, inflation is at a 40-year high. That's sending the cost of, we know, everything from gas to groceries skyrocketing now. Take a look at some of the numbers here. Eggs and bacon now both $1 more than they were a year ago. And a gallon of regular unleaded gas now topping $5. Leading us off this hour, CNBC senior markets correspondent Dom Chu and senior White House correspondent Kayla Tausche. NBC's Jake Ward is with us as well. Dom, first to you, this interest rate hike we're expecting from the Fed. What's the immediate and the long-term impact on everyday Americans?
All right, so, Aaron, I'm going to tell you right now, it's a done deal. The rate announcement just came out in the last 30, 60 seconds or so here. The Fed has, in fact, per market expectations, per broader expectations on Wall Street, raised the benchmark lending rate in America by 75 basis points, 0.75%, 0.75%, if you will. Largest rate hike since going all the way back to 1994. This is a big deal because it does show that the Fed is committed towards battling this inflationary pressure that you just mentioned. That's hitting everything from food to fuel to even discretionary items that we don't necessarily need to live but want to have as well in our daily lives. Now, as you talk about the shorter and long-term effects of what's going to happen here, the short-term effects may not be felt all that markedly by Main Street America for quite some time. What you will see is, depending on if you're a saver or a spender on credit, you will start to see your daily lives affected a little bit. If you're a saver, you could expect that in the coming days or weeks, the interest rate on things like your checking or savings account to go higher, giving you more income in those fronts. If you are a spender borrowing money on credit cards, the cost of interest on those cards will increase as well. The reason why I want to bring that up, Aaron, is because just in the last couple of days, we've learned that more and more Americans are spending for things on credit cards. There's an increasing amount of credit card debt in America, partly due to this idea that they're spending on there to pay for things like food and fuel that are increasing in cost, but are doing so on credit instead. That may not be a good sign. Longer term, these things do tend to take months, if not years, to really play out in the economy. So it'll be a very, very tight line that the Fed has to walk in the coming weeks to see how the economy is impacted by this, Aaron.
Thanks for watching our YouTube channel. Follow today's top stories and breaking news by downloading the NBC News app.